Hi, I'm Lee Stone, and this is your UFXBank Week in Review. Today we will cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's risers and fallers. The euro started off the week trading negatively versus the dollar, but experienced a midweek boost, which eroded until Friday. The pair had a weekly gain of a little over 1.2% and was last trading at 134.11. The British pound traded mixed against the dollar, but managed to close up 1.1% for the week. The pair closed at 157.69. It was a back-and-forth week for the dollar-yen, but mostly back. The US dollar lost 1.6% versus the Japanese currency and finished the week at 82.71. The US dollar also had a mixed week against its Canadian counterpart and dropped just under 1.7%. The pair was last trading at 100.32. Oil rallied for a huge week, jumping over 6.3% to close the week at $89.19 a barrel. Meanwhile, gold had its own big week, jumping 3.7% to close the week at $1,413 per ounce. The Nonfarm Payrolls report came out on Friday, as well as the unemployment rate. The outcomes were far below expectations, and the results on the dollar were as could be expected. Asian currencies advanced across the board as positive manufacturing data helped boost a regional push. The euro strengthened for the first time in a month versus the dollar, as the ECB took further actions to prevent the sovereign debt crisis from spreading. Trichet stopped short of stating exactly what new steps would be taken, but indicated that current programs will continue. Here to discuss these events and issues with me today is analyst Martin Smith. Hello, Martin.
Hello, Lee.
So, Martin, what happened with the non-farm payrolls?
Well, the initial forecast was set at 140,000. The report on Friday came out at 39,000. That's less than a third of what we were expecting and less than a quarter of last month's report. It was also far less than even the most pessimistic analysts' expectations. The unemployment rate also took a turn for the worse. It was expected to remain the same at 9.6%, but actually rose to 9.8%, its highest level since April. These figures indicate that the Fed will very likely continue with their quantitative easing program.
But wasn't the U.S. economy strengthening in recent weeks?
For the most part, yes, and I believe it still is. I have to say that what is really surprising in all this is that the negative results come after very positive indicators, including very solid retail sales. Analysts are saying not to read too much into this jobs report because it underestimates the improvements in the economy and in the job market last month. In fact, one bit of positive news to add here is that September and October job reports were revised to show 38,000 more jobs than were previously estimated for those months. This could also happen in the next NFP report.
So what should we take then from this NFP report?
Well, from talking to other economists, there seems to be a clear sentiment that this current non-farm payroll report shouldn't undercut the US economy's recovery expectations. Another bad report might, but this one has been balanced by other positive data. We can see that the report is highly disappointing, but it isn't a devastating outcome.
Okay. Well, our Ask the Broker question comes to us today from Scottsdale, Arizona. Jacob Novitz writes, what is happening with Asian currencies and why are they rallying so strong against the dollar?
Well, last week we discussed the unfortunate situation in the Korean peninsula, and this week it looks as though the situation has calmed. The Korean won led a rally among Asian currencies, rebounding 3% since hitting a 2-month low after the North's deadly attack. This seems to me like a natural correction after investors realized that the situation isn't likely to escalate. The dollar had drops against most currencies after Friday's report, so there shouldn't be too much surprise in that. But Asian currencies had a little extra help in that there was very positive manufacturing data out of China, Singapore, Taiwan, and even South Korea. There was also increased speculation that India will be drawing in investors with new share offerings from Indian companies. Even the IMF's projection that the region's economies will grow at a faster pace than other developed nations. The rally in Asia is a combination of these conditions and could, I think, very likely continue.
Thank you very much, Martin. Well, we hope you enjoyed our weekly review and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit questions to our weekly broadcast, please email your questions to Martin Smith at askthebroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.